introduce myself, Rene Van Vliet, Chief Operating Officer of NextDecade. NextDecade being a project developer at the moment. A couple of projects we're developing in the US, in the Gulf area. And that's where I headed after my long-term Shell experience. Obviously, there's a lot of talk about the current oil prices, the decline in oil prices, the effect it will have on LNG pricing. A couple of points. One is the effect of oil prices will always have some sort of delay before you see it reflected in LNG prices. Secondly, I think it's important to realize that the LNG business is and has always been a long-term business. LNG contracts, LNG developments are typically 20-year developments, take-or-pay contracts for a significant percentage of the volume. So yes, we might have some dips, but I think in general, people that are in the business of LNG take a long-term view. And so that will, I think that will be reflected in FIDs. There might be a few less, but ultimately people will look for the long term. Then there is a third element, and that is obviously the effect of the US. Henry Hub pricing, if you look at historically where Henry Hub prices have been and where people are predicting where they will go, then there is a lot less volatility in Henry Hub pricing of gas compared to oil prices. And I expect that once people start realizing that, they will get, in fact, more comfort in buying LNG against Henry Hub-based pricing versus oil-based pricing. Yeah, in particular this conference there was a fair bit of discussion around the topic of big scale versus small to mid-size floating LNG units. I think there is a bit of analogy with the FPSO business. I've been presenting at a number of conferences that people tend to forget that the very first FPSO was in 1977. The very first FPSOs were developed by the oil majors, Shell and ExxonMobil, and it took roughly 15 years before the FPSO industry really took off. And so by now we're in the 170, 180 units worldwide since early 90s, so in less than 25 years, a huge growth. And I think that's a bit similar to what is happening in the floating liquefaction industry. So Shell being the first with Prelude, fairly big volumes, complex, including all LPG and condensate extraction. In fact, ExxonMobil looking to develop a fairly big unit. And gradually you see now a trend that differentiates what oil majors, oil and gas majors are trying to develop versus what the non-majors and maybe the current FPSO operators and developers are looking at. And that is a much more bite-sized unit in the somewhere between 0.5 and 2 million ton, maybe exceptionally 2.5 million ton. That means less volumes that need to be sold, but also much more bite-sized capex and therefore bite-sized financing, in particular when these projects need to be project financed. And so increasingly I see that happening, that sort of split between the two categories, oil majors versus the rest of the industry. Yeah. I think conversion has come up a bit later. Originally all the developments in floating liquefaction were about new build. Then because of the drive for cost reduction, people started looking at conversion opportunities. Again, if I can draw an analogy, then the analogy would be floating regas, where first floating regas units were new build. Subsequently, a number of players started looking into using older ships for conversion purposes. I think there's horses for courses. If you look at the trend in floating regas at the moment, it's new build. Costs have come down significantly, and that makes it a much more logical choice and decision to go for new build rather than to go for conversion, with the exception of some very specific cases. So I see it as a sort of logical trend that people now want to reduce costs and therefore look at conversion. At the same time, people also start looking back at the lessons we learned from FPSOs, which was that ultimately, once you've gone through your conversion of the unit, of an older vessel, you realize that you've hit a number of unexpected snags, which led to increase in cost, and therefore conversion is not always as cheap as it looks like from the beginning. So we might see a few, in particular in the smaller sizes, but ultimately my expectation is that floating liquefaction will go for new build. Whether LNG, floating LNG will really take off, I think the current environment will create some heavy debates in the boardrooms about decisions. I think it will lead to more studies and maybe doing refeeds rather than immediately going to FIDs. I think we are going to see a period of a couple of years where people in fact try to combine a few things. Number one is to see whether the market gradually will turn again. Number two, to see how supply-demand in general is evolving, because there's some uncertainties there as well. And then I think certainly people will see that there are specific opportunities that lend itself for floating liquefaction. And so I expect that the whole development of the market at the moment will lead to more focus and more focus on where you can compete with a floating liquefaction compared to onshore liquefaction developments. And so in that sense, yes, a bit more studies, some less FIDs, taking into account that people want to see the first units operating, the first two Petronas units and the first Shell unit, and that combined, again, looking at the lessons of the FPSO, will over time lead to floating liquefaction taking off. Yeah, it's very interesting looking back at some of the key takeaways from this event. For me, the one and foremost takeaway was we've been talking for years at conferences about lessons learned from the FPSO industry. And for one or another reason, that didn't really materialize. We talked about it, but it was difficult to get to grips with what were these lessons. And this was the very first time that I got the feeling that gradually it was emerging which lessons we haven't fully embraced yet in floating liquefaction development, which are so clear from the FPSO learnings. And so it's the famous debate about how do you combine offshore industry, shipping industry lessons and bring that into your floating liquefaction development compared to onshore liquefaction developers who just try to condense the layout and then put it on a vessel, but still think in terms of an onshore development. Yeah? So that was a very important development. One of the speakers was talking about tipping points. To me, this was a tipping point, that FPSO learnings, lessons learned were going to much more feature at the forefront. That was one. And I think the other one was more conscious thinking about where is the next innovation and the next development going to come from in order to to make units more cost effective, to make units more efficient, taking into account that not every innovation might be easy to implement because of acceptability by financing institutions or by the insurance industry, but nevertheless looking at where the real next steps are going to be. So those were my key takeaways from this conference.